Keep watching Master Trader Live. Simple market analysis and education to help you make money in the markets. Join us live each week on YouTube and see past episodes at Master Trader Live. And now your show hosts, Greg Capra and Dan Gibby.
Good afternoon. It's Wednesday. Dan and I are here live. This is Master Trader, and today we're going to be talking about preparing for trading opportunities of a lifetime. And in this market, trading opportunities of a lifetime can come multiple times in a lifetime, if not even in a week, if you're an intraday trader. So I was saying that a little, in a humorous way, because the markets in Coronaville here move at light speed at times. And then at other times, similar today, things, and even yesterday afternoon, we go into this coma-like trading. So every market creates opportunities in different time frames. But when we talk about a lifetime, of course, we're talking about big moves that occur. And how do they set up, and how do we prepare for them, and what do we look for those type of opportunities? That's what we're going to talk about today. So introduction, Dan Gibby, who prepares these great slides for us, and we go through these and explain, and then look at the live charts.
Good afternoon. Yeah, I love that reference, Greg, that you say tongue-in-cheek that the opportunities can be in a week. I mean, we'll show you some of these individual stocks that have been on a tear, and that could be a core trade in 3 days with these crazy moves. Because when somebody looks at this, title of today, I think it's safe to assume that they're thinking about the broader markets, and they're like, all right, well, wasn't that at the bear market low? Now we're at the highs. So what opportunity are you talking about, long or short? And it doesn't matter, the time frame, the market. We're going to talk today about the approach to look for those high probability setups on all time frames. So let's continue. Everyone has, hopefully they have an approach to the markets that they can objectively and consistently follow, as opposed to listening to tips or the news, and that's a quick way to the poorhouse if you don't have an objective approach. Our approach is everything starts with a high probability setup on multiple time frames. Then we look at the other concepts that make up our method. What's the trend? Where's support and resistance? Is it showing relative strength or weakness? What's the broader market doing? What's the market internals doing? And we put all that together to come up with our bias to trade anything that moves on that particular time frame. We'll show you a little bit of our market internals. Let me get my annotates.
And the intermarket analysis part, Dan, because so many don't really look at that. And, I'm just going back and thinking, of our theme, opportunities of a lifetime. And most of us think about that from the long side. But I can remember back in the year 2000.
You and I were sitting next to each other, 1999.
It's like a lifetime ago. And I mean, that was a crazy time as well. You think this is crazy, that was even more so. But, back when things were so crazy and going up like they were, which seemed like it would never end. It's always that way, of course, near a top. But into market part, I mean, the transports were deteriorating terribly back at that time. And, yield curves that we could talk about. But, I mean, the issues were there, telling us that a trading opportunity of a lifetime is coming on the short side. And so, and just bring that up because we typically think about it on the long side, because markets go up for a longer period of time than they tend to go down. But when the turn comes, the opportunities can be tremendous on the short side. So there are both ways to look at that. Trevor's asking me, do you think we are at a top? Well, there is a top and there's the top, the big one, right? So no, we're not near the big one. The big one typically comes with a yield curve inversion, which starts on tighter yield curves, for a better way of explaining it. And I tell you, the Fed really pulled a rabbit out of the hat because the makings were there prior to this big drop. And then when it started, and then they started pumping so much liquidity into the system where the shorter term yield curves did invert, but just before the big daddy inverted and got worse, it turned back up again. So that was one of the things that I talked about back at that time where, you know, pretty much everybody was talking about Armageddon. And I said, these smaller tighter yield curves are turning up here. I said, this is going to be a help, but things look so shaky. And then eventually we know in retrospect that it did turn around. So no, we're not at the top, but it'll come.
No. So we'll show you the time frames that we use for different things. So I grabbed these this morning, Spider Weekly and the Qs. Bear market collapse, the fastest fall in history to bear market. I think the Spiders in 19 days, it hit bear market territory under 20%. So we actually, and I'll show you the market internals on the next screen, that they foresaw not this drop, but they foresaw a drop. I mean, look how overbought this got on the weekly chart, and they told us that a bottom was near. Now, I make this silly analogy. Here, I'll just go right to the internals. I make this silly analogy that if you're trading in a cave or an island and you happen to have internet, you're not watching the news, and you rely on your instruments, which is what we're showing you right now, you would say, I don't know what's going on back in mainland on New York Stock Exchange, but it's pretty bad. And then you go down to a smaller time frame. This is the volatility index, and I grabbed it near the lows on the weekly charts. This was the bear market collapse. This is the volatility index. So volatility rises with market fear. People running to go buy puts protection. And this thing made a multi-decade high. So that's a plus, saying that we're near a low. And these are Greg's market internals that we use for swing trading at extremes. And, you know, they aren't pinpoint, but Greg, they're yours. Why don't you, talk about A and B here? This, we were talking about breadth and sentiment getting in the bearish extreme. And on the downside, they gave us a heads up that they are at a bullish extreme.
Sure. So back at that time, we also had extremes in alignment here. However, the move was just getting started. And what I talked about back at that time, when this first went down, and if my memory serves me right, this was about a 30% move during that time.
I don't think so, because I think it was 40 at the low, and I'm just visualizing that in my head.
Yeah, I'm just thinking, what had happened at that time? Again, I'm just trying to remember what had happened at that time, but what I had explained prior to that was, and you can't see it on this chart, but breadth was deteriorating and sentiment, had gotten up to an extreme, and then over here. And while it gave a bullish signal, what I explained was it went from one extreme to the other so fast that it said more is coming on the downside. Right. So that was the initial blast to the downside.
Right, then, but that would still set up a short-term bounce.
And it did.
Right.
It did. But, you had to put it in perspective of these internals are supportive of having a bias for more than 2 days or 3 days.
Right, sure.
But things happening so much faster than they did. But anyway, this is something to put in your notebook, is that when you do see these internals go from one extreme to the other so fast, it's actually confirmation. So then, as it continued to move down, and you could see there were no retracements, there's just a steady flow to the downside. And, this is where we look at bullish bars being ignored, like that bottoming tail bar, and green bars being ignored. And that's just confirmation of the bearish trend. And then, when we got the alignment down here and it began to turn, we said, okay, we're getting close. So they give us that guidance, and any of this is available to anybody. There's nothing proprietary here. Sentiment is just the total put call ratio. You take the raw data and you just put a 5 simple period moving average on it. That's all this line is. Breadth is a McClellan oscillator. They have a fancier version that's supposed to normalize it over time. I just use the old fashioned one. It's just a McClellan oscillator. But they have to be in alignment. One without the other can totally throw you off. So, and I used to look at many other market internals years ago, and they all have some helpful information, but eventually you see that they kind of eventually mold into each other. So I just simplify things, as I always try to do. And I pick two: a sentiment and breadth. And that's what we have here. Sentiment, what option traders are doing, because historically they're always on the wrong side at an extreme. They go all in. The other guy's got, a full house, or whatever you call it, a straight full house flush, and you're sitting there without even a pair, but you're going all in. That's the wrong way option traders.
Then how would you respond to, there's other people who like to prepare fancy research, and they say the put call is useless.
Well, if you look at the historical data, it's hard to justify that.
I agree. I mean, that's right. We could have a whole episode just talking about turning points with the spiders. Exactly.
So, I mean, you could make that argument that it's useless on any given day, but even intraday, we find it to be helpful. Not always, but the point is, as you look at the moving average, and you can say, well, what about a 10 period moving average or a 50 period moving average? And I looked at all of that, and it was too slow. So the combination of the two, looking at decades of information, worked out well. And looking in hindsight, it worked out well. And having now used this for a couple of decades, it's worked out really well. Exactly. So it's not something that, hey, tomorrow is, the market's going to crash. It's not what that's about. Right? It's about being prepared that risk is rising on the long side or the short side, and opportunities are rising as well.
And we have our swing and options trader. This is what you said right in the letter to our subscribers. Sentiment gauges in nosebleed territory. I love when you say the warning, somebody's going to get hurt. Yeah. And you made the similar warning when we go to live charts on the spiders. You can point it out, but you made the similar warning right before this prior 10% crash.
Yeah. And people think, oh, Greg's got some, amazing crystal ball or some clarity, or, sits there and meditates at night about the market and, comes up. No, I just look at the same thing that we're offering you to look at. And when they line up, it's not like it's going to happen in an instant, but something's going to happen. So you get ready.
Right. And I like to say they've done their job, and now we're looking for price action for the trading opportunities. And, Greg, we have different subscribers. They could just say, just give me the picks. Remember, we had one guy in our green room. He said, I'm just sitting on the couch drinking coffee, waiting for the bell to go off, and I go and put a trade on. He wasn't particularly, interested in learning to fish, so to speak. But in our advisory letters, we deliver both. We give you the high probability trade setups. We give you the reason why, the market research. So you can learn as you're going along. I like this slide because our approach to the market, as we've been talking about, is objective. It is what it is. And so these are the only movements that a stock can make. We teach you how to recognize an uptrend, downtrend, sideways trend, and then we teach you when do those trends break. Once you recognize that, then we teach you, okay, what do you do? What is your toolkit of trading opportunities in each one of these 7 pictures? And that's what trading is all about. This is how Greg defines pivot highs and lows in the swing course. And you can very easily program your computer to spit these out. But we're looking.
Dan, you don't even have to program. Almost all of these platforms years ago, when I first started, showing it this way, I had to program it into eSignal. But you have it today on TradeStation and a lot of other platforms. They have it. It's just simply, when we talk about pivots, all we're doing, we used to talk about it years ago. We explained different types of pivots, but I just came to decide, let's make it real easy. And I'm just kind of drawing it out here. You get the idea. All it's saying is that there's anything that's a pivot. So where we've kind of made it where it's a V, it's a pivot. So there's 3 higher lows to the left and right. And just turn it upside down over here. So as it's going up and down like this, and then pivoting, right, eventually at some point, it'll break that pivot, or what we call major support, which is the pivot prior to the higher high. So it's no longer in an uptrend when that happens. And with that, we always tell everybody, well, now you don't have to put trend lines on. You don't have to connect the dots and project your line into the future as if some mystical, mysterious way is going to create overhead resistance now because you projected that line or support. There are so many technical analysis concepts out there that are being taught as if they're facts, and they're ridiculous when you think about it. But this is where the whole holy grail thing comes from, is that there are these tools that you can use to predict the future, which leads to the question, what if you connect the wrong dots and you place a trade and you lose all your money based on some ridiculous line that you drew on a chart? Anyway, what we're showing you is just a way to objectively, in a black and white way, determine a trend change from up to down or from down to up.
And just back to this, the markets fell so fast and actually rallied so fast that they didn't set up these pivots that we were looking for. We actually were looking, I'll show you a daily chart, but we actually were looking for a retest pattern here, but then the Fed got involved and messed it all up in terms of what, the perfect picture we were looking for. So what you would have to then do to get on board a moving train is to go down to a smaller time frame. That's how you get around it. All right, so here, these are wonderful retest patterns that you can trade on anything that moves, any time frame. They work the same. So as I mentioned, this is what we were looking for, which historically is the case. You get retest patterns. But as I said, the rubber band got so stretched, coupled with the Fed input, we didn't get these. But we're still going to talk about them for future opportunities, and we get them all the time on smaller time frames also. So the issue's coming down, went up, came down. NL means new low shock, because this isn't a downtrend, lower lows, lower highs. So you had a momentum move, bounced in a retest, buyers stepped up. The new low shock is the bears got trapped and also took out some stops.
I love it when those happen intraday, Dan.
Absolutely. Well, in fact, Greg, let's look at, well, it was a sell setup, but on the bonds you mentioned pre-market had a beautiful, so it's not the same double top.
Right. It was more of a shock.
Correct.
addition to the sell setup.
Correct.
It was a failure. Whereas a lot of times in the green room, you see, we'll do a futures trade, and as it takes out and makes the new low, that, you know, we're combining that with longer time frames, but coming together with that little piece of making a new low or in the move, things turn and make, you know, nice moves higher.
Yep. Well, and I've heard you say that many times in here, that these shock patterns, you know, we've all been in them, but you were smart enough to learn from them and then actually to look for them because they're so powerful.
Yeah, which evolved from, you know, I'm sure somebody in this room, all the people that are with us, at some point has sold the bottom of the move. You can put your
Debbie
hand
hasn't.
down. Yeah, I mean, so it happens at some time. So the question comes, you know, so you sell the bottom of the move, right? And then some giant move happens. So after kind of getting up off the ground and brushing yourself off and wiping the tears away, you know, you ask yourself, how could I have traded that, taken advantage of it? So by studying a whole lot of charts, I was like, wow, this happens a lot. So how do we put this together in a method and a strategy? And so, you know, that's what we do. And, you know, is putting that together with multiple time frames and a strategy and the candlestick patterns and such to say, okay, this is the strategy, the picture that sets things up to be able to buy after making that new low. And in addition to knowing the type of setup that says, hey, don't short that new low because this is what's likely to happen.
Yeah. So here's the daily of the spiders, and here's where the market internals got cooked to the bullish extremes. So even though, as we said, the alert came here, we're just waiting for a bullish setup, and it didn't come until this gap up day. And then I marked this one. That's when the Fed came out pre-market. And I think I remember this, Greg. Remember that it was the record horrible employment data. Record horrible. And so the Fed, you mentioned pre-market, and we all, you and I surely agree, the Fed has an expert timer on his press releases, and he did it perfectly here to prevent the market was actually down, I think, 800 points, you know, before they did this. And then that set off the bottom, and you know, the bulls are calling that the Fed put. Every time it tried to go down, here was the crash, the 10% crash, where on this red day it was the weekend, and Greg wrote in the letter, danger, danger on the long side again because of the market internals.
Yeah. You know, Dan, what you're saying, you know, about their timing. I mean, I've been doing this a long time, and I've seen the Fed come out so perfectly with the timing of saving the day.
Yep.
Or you could say inflicting the most pain on the majority, where the markets or the perception is the market is ready to crack. And they come out and turn it around. Because I can remember, I don't know how many years ago, had to be 20 years ago, Dan. I was short and I saw just things percolating a little bit and started getting out, and they come out and cut interest rates. And it was, wow, how things took off.
I remember that day. Yeah. I remember where, yeah, in the financial crisis, they cut them 75 basis points. Fernando and others, if you can put your drop down to all panelists and attendees, but Fernando's asking, hey, why are you all considering longs if your market internals gave you a bearish signal? Well, it fell 10%. This is a very bullish reversal. It gapped down, went deep into that. And even though Greg was explaining, you know, the power of the down move in the market internals suggests maybe more pain is coming in the future. This is a very bullish reversal on support, and so we're swing traders. We're trading alongside until we're not.
And this week, Dan, intraday, the markets were ready to roll over. I mean, I said it right in the green room and said, this is where the intraday buy setup is supposed to fail or form an M top. And it
And guess
exactly did happen. It was happening. And the Fed comes out and says,
right,
oh, we're buying corporate bonds now.
right.
Right?
That's it.
So the patterns communicate to us what people are doing. And we see the markets rolling over and the intraday pattern setting up. And here they come.
Yep.
And so traders start buying, shorts start covering, and it ripped the market higher.
Yeah, that was right on this reversal day.
No, I think it was on the bottoming tail bar day.
No, I don't have today, which is Wednesday. So this is Monday, and it was Monday that they had the
Was it Monday?
conference. Yeah.
Okay.
All right. Let's look at some sectors, and then we'll look at the live charts here in a few moments. So even though the broader, or at least those Qs made a new all-time high, as you saw, the other ones made terrific rebound, bear market bounces. Look at these beat up sectors still. Jets, weekly chart. Look at cruise lines, equally beat up. You know, the demand crush on them is horrible because of the coronavirus. So Greg, today's episode, we're talking about opportunity. Do you see any in these in beat up sectors, which have been restaurants, cruise ships, casinos, leisure, restaurants?
Well, this morning, and I mentioned it in the green room, the market so far is still just chopping around here, doesn't know what to do. But, I had mentioned that the airlines intraday look like shorts because the dailies, the way they came up and pulled back and started to reverse, they look like they was a buy setup failure, but it just hasn't really started to break yet. So I don't know. Things are kind of weird here in the moment. And
Right, but our approach, if a subscriber said, "Hey, can I core long this?" We would say absolutely not. It's already had a big run. It's an ugly weekly reversal, and it's a mess. Maybe we can find opportunity on the daily, long or short, for swing trading. But the answer, just to me, is no. These are not. These are, at least as of now, are not long term.
so, Dan, what you said, and you're always looking for ideas for the next MT Live because we've done many of them, but not that we haven't done it before. But I mean, looking at these charts, and you're saying, well, we find other opportunities, longer short, blah 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 blah. Show me how to take this chart and trade it with another time frame, because we know if we change the picture, we can potentially find an opportunity. Even though this weekly is, I'm not so sure what it's going to do here, but in a different time frame, I'm sure we could. So just an idea.
Right. So considerations in trading these bottoming patterns, downtrend, we're looking for that big W bottom picture that we went over earlier. But I call it a something something. Greg calls it an event. We need something to say, all right, you're ready. And then we need a price void. We need there to be, if we're long, insignificant resistance to the left. So here's an example, bottoming pattern that we actually traded a couple days ago. This is very bearish action right here. With this would be a great example, Greg, for our moving average analysis. You got a little breakout failure, you got a breakdown, you got all three MAs, the shorter ones, the 20 and the 50, rolling with a 200 downtrending, bearish price action here, but that's another story. So the something on this multi-month bottoming pattern is this wide range igniting bar on volume. Now you got my interest, and you look to the left and I have a price void. Then it went sideways for another couple of weeks here. Here's where we bought it and we gave to our subscribers. This is a gap breakout with a price void. And so, and we had a huge gain on it. I forgot where we got out, but some of these beat up stocks that we've been trading, even though the Qs and broader markets have made their bigger move, we've had a pretty good track record of trading these beat up sectors for huge gains. And that's what we're reviewing with you now today. I just decided to grab GE here, and Q's at record high. GE still in the doghouse. Daily chart on the left, weekly on the right. And so I ask everyone, is this a long-term buy? What about the relative weakness to everything? What would you do with this piece of junk?
Well, Dan, that looks like the airlines, right? So there's lots of junk, right? I think we did an MT Live. We certainly talked about it in the green room a lot because we did a lot of these trades, especially you were picking most of them. I said that junk coming off the bottom,
right?
And so a lot of them, the airlines look like that daily chart now, and the gap up yesterday, and they're kind of like teetering today, whether they're going to form measured moves down or, get pulled back from going over the cliff, so to speak, because the weeklies look like crap.
Yeah. Ed, price void just means you look to the left, and we're looking for insignificant resistance. And when something falls rapidly, that's insignificant resistance, as opposed to a bunch of overlapping bars and pivots is, so when we look at live charts, I'll explain that to you also with some other examples. Here's an example right here, Ed. See this green bar right here? Let's say somebody asked me, hey, Dan, it's down 3 bars and I got a nice green bar. I would say, look to the left. There's no price void because I have 6 or 7 overlapping. I just view these as like football players. You have a defensive line of your favorite team looking at you right in the eye. No price void. These I grabbed this morning just to, again, with today's theme of there could be trading of a lifetime on individual issues. We were watching this UONE rocket ship 2 days ago in the green trading room, and we were watching it to see how high it could go. And I remember it was at 20 and it was at 25, and I was asking people, hey, do you think it can skyrocket to 50 today? Well, it made it to 40. And next week, actually, we're gonna do an MT Live on how to trade these rocketing stocks and how to get on board a moving train. This one, Neo, gave this one to our subscribers here after breaking out, came in right on minor support, reversal, rising 20. It's a no-brainer entry. And we sold into strength. Slopped around for a while. And we actually got an email from somebody, I don't know what it's doing today. And he said, hey, Dan, can I buy this now? And I said, well, it's extended. I mean, your no-brainer entry was here. And part of the problem is if you're buying this for a swing based on this wide range bar, your stop has to be under this wide range bar. So the risk to reward is out of whack now, unless you're just day trading it. Here's one we gave our subscribers 2 days ago on this wide range igniting bar. I mean, it was very tradable over here, but I didn't find it there. And so we have 2 inside bars from here, multi-week consolidation. Ed, price void, look to the left. There's nothing over here. And I'm not showing you the weekly chart, but believe it or not, I gave this as a core trade to our subscribers because the weekly chart is a beautiful breakout also. My target was $6 to $8 and it got there in 2 days. So I didn't want to sit through a pullback, and I said, you know what, just let them have our merchandise. We'll look for a new setup.
Well, I put those check marks there because, we were talking about how something moves and the pivots. And, you know, Dan says, well, he didn't see it over here. Okay, and but it made this gigantic move. And you say, well, that is so extended, you know, how can you possibly think to buy it? Well, it formed a pivot. So it created support and then it retested it. So it formed a new pattern, which said, hey, it could go up again because it rested. Right? So it built a new area of support, and then, you know, that big green candle right there said it's ready to go up again.
And boy, did it. So in the green room, we got a $7 no-brainer trial. This is where we start at 9 a.m. Greg does pre-market analysis. I review open positions, our gapping trades, and we're scanning together, we're trading, this is where you see us walk the talk. You know, we're talking now, giving you very good information, but in the live trading room, you see us walking the talk. Let's see the market breaking out right now for some reason. So check it out. We give ongoing education, trading, day trading, swing trading, everything. This is just a concept we always use in our approach. And I just grabbed this one, oversold. It's a climactic buy setup. And we can drill down to smaller time frames to help us decide when to get on board. And we always use multiple time frame regardless of what time frame we're trading. We could be trading the weekly chart and we still use multiple time frames to perfect our entry. But the hourly here broke out, higher low, beautiful. This is what we call a 180 reversal on the 15-minute chart. Now it's ready. This is just one of the many junk stocks we played, in the beat up restaurant leisure back here in March. Bought the stock at $9 and change right here. Look at it. We made a 50% gain in one day. The next day it gapped up. We sold it into strength. And this particular time, we had 17 wins, trading the bear market rally. We love selling credit spreads as what we call an income strategy. I've been showing you charts, obviously, and when we do a directional trade, we want it to be a high probability setup. Whereas when we sell credit spreads, of course, I would also like a high probability setup, but they can be sloppier if they set something up saying that's major support, that looks like a short-term low. We sell puts on them. Other people are buying puts on these patterns. We're interpreting the pattern and saying, that doesn't look like it's going lower. We sell one put, we buy a further out of the money put. The difference is credit coming into our account. And that premium we take in is profit, as long as this just keeps going sideways or up. The money that the option buyer paid is evaporating into expiration. Just another example, when the market was crashing here, we were selling. I think Home Depot is back to all-time highs. This was an amazing time to be selling options. We sold the $100 puts on Home Depot, which means that money's coming into our account. Home Depot is now $252. We said, yeah, we'll buy Home Depot at $100. That was $50 lower, and we still took in $2.10 a share. It was an amazing time to be trading back then. So if you like that concept of selling credit spreads, you can go to mastertrader.com spread trader. We have a great silver 5-module course. 99% of the people then upgrade because they love it. This is a very detailed 12-module course, and you can read about the platinum. And that brings us to the end. So what we're going to do now is I showed you the swing trading course that Greg teaches. all of these thought building lessons and concepts that we put together. And then it allows you to objectively read what is going on to trade anything that moves. So what we're going to do for you, if you want to buy that amazing swing trading course, people who are just starting out or people who have had 20 years of experience get a tremendous amount of value from the swing trading course. We're going to give you this advanced credit spread course for free.
Oh, damn.
And
$1.
for $1, yep.
$1.
And you know, I mentioned the green room. You can take a $7 trial, but our weekly options trader gives constant trading ideas of selling these credit spreads that expire 10 days or less. We had an amazing run recently. We came into Monday with, I think, 8 bear call credit spreads, closed all 8 out at profit. Then I think the next day on where we had that bullish reversal that we were talking about earlier, we put on another 8 or 10 bull put credit spreads. Those all, every single one, were at a profit. And we got a couple opens right now. So we're going to give you a month of the, actually, no, it's not the weekly options trader. It's the swing and options letter, which is the where we trade stocks and options. All right, enough of that.
So to go to that, you know, you go to the website, you can, that link will take you there, but on the website, on the navigation thing where it says education, you just go down and you'll find the swing trading course there and click on it. But I don't think I have the.
Well, no, I created this, Greg. Mastertrader.com/swing spread.
And what is that going to, Dan?
The cart.
The cart itself.
Yeah.
Okay. All right. So if you wanted to read about the swing letter or the swing course or the advisory letter, you could do that on the site, of course. So Dan created that, and it takes you actually to the shopping cart.
Right. All right. Let's take a look at.
Current members of what, Jacob? If you already have the swing letter, the swing course, yes, I will do that.
Wow, you're in a good mood today.
Not really.
But Jacob, but you know, the truth of it is, you know, Greg and I love trading, teaching, but in terms of this, we genuinely want people to learn in themselves. So sure, if you want it for $1 and you're going to learn and become a better trader, sure, we'll honor it for you.
Dan, here's a great question. You're going to love this one. Kung Sung in the YouTube channel, he said, wouldn't you be exposing yourself too much when selling credit spreads that are close to expiration, exposed to the gamma risk?
Right. They've learned that from Tasty Trade. Exactly.
Yep.
Yeah, no, gamma risk just means that the underlying stock is moving. The delta is moving. That's all that's all gamma is measuring, is the stock moving. But guess what? We are technical traders. We're pattern traders. Of course, I know it's moving. That's what made me get into it. And I have my stop loss and I manage in between. So we love short-term expiring credit spreads, particularly 0 days to expiration, which means we're selling on the day it expires. With spiders breaking out right here, this would be a candidate to sell a 0 DTE put spread right now. I would have to go through my checklist and see what strikes and premium. But right now, 12:46 Eastern time, we take a risk. So our bet would be, I think, the spiders, and I've put in a low for the day. How much are you going to pay me to make that bet? I got to go to the option table and see. Which I'm going to do is Greg's pulling up the charts.
All right. So let's look at the charts, Dan. Let's see here. I just have this one here. We could look at multiple time frames or what have you. So Dan, this was one that came up today that was asked about in the room that said, hey, I think you see even today here, someone said, what's up with this stock? The $35 puts are like crazy money.
We're in it. We're in a put spread. I gave our Greg, show them where $40 is. And I gave it, I mean, for me, it's kind of an experiment. We sold, so this bull put credit spread that I've been explaining, folks, we sold the $40 put. We bought the $35 put, so that's $5 wide. We took in, Greg, $3.50 a share. I've never in my life seen such a juicy credit so far out of the money. $38 out of the money. We got $3.50 a share. So I made it really clear to people we're going to be holding over the trade I'm making is I'm risking $1.50 a share to make $3.50 a share, and the stock can go $38 against me.
Bella B on YouTube's asking, what strategy do you use to fix losing call option? Well, you don't sell naked call, first of all.
Well, second of all, everything we do is based on the chart pattern, so I can't give you a blanket answer. If the pattern is destroyed, we would just stop out. If it's just, I like using the analogy to the DJ guy, spinning the dials, putting in more, bass or treble, and we can use an adjustment strategy to tweak our buys. But that's our approach. We aren't mechanical. I can't say, oh, if your delta reaches greater than 50, then selling out of the money 30 delta call. We aren't mechanical traders like that. We're chart traders.
All right. So Bella, if like Dan said, if the chart's destroyed, sometimes we stop out, we take a loss, we move on, we assess it's not working. We're not option traders from the point of view where we're going to roll into eternity. That's what most option traders do that don't use charts. They roll.
Right. And then when the stock's going against you, the rolling, you are digging a bigger hole than taking your stop.
All right.
Somebody, Teresa or somebody, you were asking us about a couple symbols. If you can give those to us again, we'll take a look at them.
Bella says she bought a call option on SMAR into earnings. Well, if that was the price, are you saying you bought it and it gapped down, Bella, or you bought the call now when it's going up? Two totally different situations. Anyway, if you bought it in the past and it gapped down, I would venture to say, unless it's a very long-term dated call, you're never going to get your money back. All right, W. Looks great. Nice big run, consolidation. Look at this little rounding bottom here.
Yeah, we gave that as a put spread the other day, and I'll put it on my list right now. I like it.
So I just crunched up this chart. It looks like it's new all-time highs.
Yeah.
So
looks great.
Looks very good.
It's right at the 15-minute chart resistance after a nice morning run. So ideally, you want it to go sideways for a couple hours.
Yeah. Okay. LVGO. Another nice one.
Yep.
It's up a couple of days.
Yesterday was the entry. Yeah.
Yeah.
We have a whole list of good stocks we're watching into the close.
But new all-time highs. Another example of a momentum run and creating support. Looks good. That one I mentioned this morning, Dan, I don't know if it got going. Still didn't get going.
Right. But if it does, explain the concept of red bar ignored.
Exactly. So like here, red bar ignored. Maybe tomorrow this does that where it reverses. Well, we don't know where this is going to end up today. You know, it's still early, but it's showing relative weakness today, but it's a similar type of a pattern where, you know, it moved up, it consolidated, it went up. Look at how they bought the dip and it consolidated, was bought on the gap down this day. And for whatever reason, it's just not ready to blast off. So, and another one, new all-time highs.
Oh, yeah.
Hey, Doc. No, that's not the one. TDOC. TDOC. I don't, that one's more of a trading range because of the depth that it came down here. You know, you can see buying at support, and now it's coming up to resistance and a whole number of 200. I would not be a buyer of this here.
But for a day trade, it was a 1, 2, 3. It would have been good
Yeah,
this
yeah,
morning.
right. So, and, you know, well, it just blasted off in the morning. And now all the longs are kind of in hope mode that it holds on. Maybe it does.
Here, check it. Here's another 1, 2, 3. Check out VOX. On the daily chart is on our list.
Yeah. It's a cheapie. Got a little resistance there, but it's doing the right thing at resistance, Dan.
Yep.
You know. Let's send alert. Done. Tim on YouTube. He always got good stuff, Tim. Nice. Diabetes care. Nice little pullback. Starting to move up. So it's got this stuff to the left there. But, you know, it's a nice pullback. It didn't break through major support. So I would think that it might stall there, but should be able to keep going.
But also another put spread. That's an example of, even if it's not a great directional, that's a great wide range bar from consolidation, and we sell an out of the money put spread. Now, I'm not saying to do that. We have to go through our checklist,
Right.
but that looks like a short-term low. Looks good.
So, you know, for those of you that are saying, well, Dan's saying, well, you might be saying, what's a put spread? Well, you know, Dan showed you a chart of where it comes from, but it's exactly the same thing of saying, hey, you know, we're saying these options down here, say whatever this number is, I don't know.
Right.
So let's just say it was a 75 strike and we sold the 75 and we bought the 70 and whatever money was left over, we put in our pocket. And as long as it doesn't come back down, say to 75 bucks, you get to keep the money. That's a credit spread.
Yeah.
Simple. ZI. How do I get silver package for $1? Mickey's asking. You buy the swing course and you just click on the little box that says added for $1. And if you want the advisory letter for free, click on that box too.
Yeah, Greg, look at 15-minute chart of Zulu India. A number of us in the green room tried to short that breakdown, including me. And I said, folks, and this is, you know, an example of our green room people or traders, yes. I said, there is nothing that suggests this thing can't plop $1 or $2 for a day trade. But show them the 15-minute chart, please. It was a no-brainer short. Look at that.
Right here?
Yeah, that's when I tried to short it.
Oh. What do you mean you tried to short it, Dan?
It was not shortable. A couple of us tried and not borrowable.
I don't know what I was doing. I bet you I could have shorted it. Only because of the brokerage firm.
Right.
I mean, maybe not, but
Ahmad, I looked at puts and they were too spready, so I didn't do that.
Jeff got it short. Where's your broker, Jeff?
Greg, he's asked, why don't you, it's an unrelated subject, but why don't you go ahead and answer him? How would you manage that now? He's asking.
Well, I go down to a 5-minute chart. That's a big bar, which means you got to give it all back. See, the whole problem with wide range bars is they create voids. And this is a big move in a short period of time. So I can tell you for a fact, I would have covered some.
That's right.
I'm always looking to the left to see where's it falling to. So I see this low down here. It got pretty close to it, but still pretty far away.
Yep, I'd be trailing.
So, you can use the middle of that bar as a reference point, the 50%. There's just no place to put a stop. And you don't know how far it'll go up. That's, a nice big move in a short period of time.
Hey, Greg, look at, Joe's asking about net, N-E-T, and we've been in that for 2 days. Look at that beautiful thing moving.
This one?
Yeah, the daily.
Amazing.
So we entered that 2 days ago. Did nothing yesterday. Today we moved the stop, sold a third into strength. And as soon as we're done here with MT Live, I'll probably have them sell another third.
Yeah, beautiful. Another consolidation, creating support and a blast off there. New all-time highs again. And technology. I mean, most of them are technology or biotechs. I don't want to miss any questions. Yeah, so Junction Leasing was asking me about that thing. So there's the checkout if you're interested in the advanced credit spread course. And Dan came up with this idea on short notice. We could have made it no cost at all, but the ability to do it quick was to make it $1. And you can get the advisory letter, which is swing trades and option trades, or a lot of swing trades, for free for a month. SQ, another beautiful uptrend. So this market, you hear about markets that, you say, well, you could have thrown darts at it and made money. This is not this market. No, you have to search and find, you have to, picking the stocks. So finding things that are in solid uptrends, which we could do with this platform. We didn't mention that when you become, part of Master Trader, these scans, these platform layouts are available to you for free. So we forgot to mention that, but one of them is this combo thing here where we could then go and look at what's trending up. And so we could sort it by volume and is it a recent uptrend or downtrend? So let's just sort it by volume. And of course, there's Microsoft in there. That's a weekly chart. But it puts you in the ballpark. Of course, Apple. Now, this one has been in the news, so I would just set an alert on this one because maybe it takes off. But anyway, you're going to find these stocks that are in uptrends. Now, this one had a crack, but it's still in an uptrend based on the criteria. Facebook, still in an uptrend. Here's another one. All right, we looked at that one before. And of course, we look for, well, what about downtrends? Which, there's still things that are moving down that short setups. And you find a lot more of them, of course, in a bear market, but we provide you education to know how to do it yourself. We provide you the tools to find what you learned. Now, this software, we don't own it. We're not affiliated with them. We've used it for many, many years. It's a great tool. But what we've created within the tool, we make available to you for free, which is kind of priceless. You know, there are people that sell this kind of stuff for hundreds, if not thousands of dollars that, you know, put you in the ballpark. Tim's asking me about TBT. Then we're going to wrap this up. We're getting there. TBT looks like interest rates can go up here. It's been bottoming forever. You look at the weekly chart there. So, you know, big break to the downside, but maybe they can go up here, Tim, and, you know, make a measured move and go back up. Do we have to use TC2000 to come? Taryn, I don't have these scans for other software. TC2000 is relatively inexpensive. Check out their site. So, I mean, if you want to build these kind of scans into your software, others have done that. And I tell them to just get a monthly subscription. Gold. Well, you want the gold, Derek, because you can have more scans going at the same time. And then add real time if you want intraday charts to be live and on real time. If you just want the swing, just the gold, I think it's $29 a month.
Yeah, 30.
So, yeah. So again, there's lots of scans in here. Bottoming tail bars, there's a pulling back to the 50 MA, bullish 180s, breakouts, weekly and daily time frame. So all great stuff. I mean, I don't know, Dan. This one's going downtown, Bella. Buying a put. I would venture to say the puts are pretty expensive after a drop like that. So options are a fabulous vehicle, but you got to know how to use them. Right? It's like, you know, if you're going to have a gun, you got to know if it's loaded, which way to point it. So those options, those put options are probably very expensive. And if this just stalls and starts to crawl lower, you're going to lose money because of the time decay and because the volatility has expanded so far. This is a tasty trade option trade, right? Range, you know, volatility expansion. You know, they'd probably be doing some bullish option trade on it. And, you know, it just, you know, exploded to the downside. Anyway, Q's breaking out. Yeah, we got to get back to the green room.
I agree. I'm staring at it here.
You know, things are
Looks
starting to
good.
percolate here. So,
Q's look
guys,
great.
I hope you enjoyed this MT Live. You know, we're here every Wednesday and, you know, offering you education, getting to know Master Trader, getting educated, joining us in the green room, and of course, making money. Right. Have a great day.
Good trading, everyone. See you next week.
Bye-bye.
Thank you for listening to Master Trader Live. If you liked the show, we invite you to share this video on your timeline or tag a friend who wants to learn stock market tips. Stay educated with our free chart of the week, a weekly analysis or lesson sent right to your inbox. We're live every week, and you can subscribe to the channel and press the bell to get alerts. If you've enjoyed the event, please give us a thumbs up. Just visit mastertrader.com. That's mastertrader.com.